Hey guys, what's going on? It's Paul Salazar at Hilton Hyland Real Estate. Today is a new episode in our series of real estate during COVID-19. Today we're talking about should you buy now, right? I have a handful of buyers, and some aren't looking and some are looking. But the ones that aren't looking, they're asking me, hey, should I buy now? Like, what's going on? Are things still transacting? They have all these questions. So we're going to answer all those questions today. And if you have any questions after the webinar, feel free to reach out to us. We have Jack Gladden here as well. Jack's been on a few of the episodes in the past. Jack's helped out a lot of my clients in either refinancing or purchases. So he is a wealth of knowledge when it comes to loans. And obviously, if you're a buyer and you're not all cash, Jack is a great resource, right? He's helped out again a lot of my clients. So hey, Jack, how you doing, man?
I'm doing good. Thanks for having me, Paul. So happy to be back. My hair's a little shorter than the last time that we spoke. So
just a little bit.
I'm going to stick to the loan business and not try to cut my hair ever again. So
that's probably a smart idea, man. Looks good though, man. Looks good, and I'm sure it's just easier in the morning when you get up. You don't have to worry about doing your hair, so it's one less thing to worry about.
Exactly.
With all those refinances you're doing, you need more time to focus on those.
Yeah, exactly.
So let me tell you guys a little bit about myself if you guys haven't seen one of our webinars. I've been at Hilton Hyland for the last 11 years now. I've been in real estate for about 14 years, and been selling real estate here in the greater Los Angeles area for a long time. So I'm very familiar with the market. And I started here in the greater Los Angeles area back in 2009 when things were really bad. After the Great Recession. But I saw the market just blow up over the last 10 years, which is it's been nuts. We started this web series because a lot of people are just misinformed about what's going on in the marketplace right now. A lot of people are telling me, nothing's selling, nobody's looking at buying, and that's obviously not true. So we're not going to give you our opinion. We're going to just show you some facts. And I think that's the best way to look at anything. It's just to look at what's actually happening. And then a little bit about Jack. Jack, give us a little bit about you.
Yeah, sure. And I'm not sure if the video switches over to me or not, because right now
I think it does. I think it does, yeah.
Okay, cool. So I'll just jump into it. So I've been in the real estate business 10 years. I'll just keep this very basic. I was a realtor, switched over to the lending side. And Los Angeles is a very unique market, so it's important to work with a lender who actually specializes in complicated income and also complicated properties, because Los Angeles, that's basically all you're almost certainly going to have one or the other. So my company, we do loans anything from $100,000 to $10 million and above, and basically, I mean, we can basically do it all. We can do it all. So if they're doing it in the market, then I can help you with it. And so what I want to talk about a little bit in this webinar is just one of the things, like how the rates, what's happening with the interest rates, because there's a lot of talk about that, and a lot of it's actually accurate for a change. But then also what kind of loan programs are and are not still available right now, and then kind of what's that expectation of whether or not they'll come back. So
awesome. Okay, well let's get right into it, guys. I want to talk a little bit about what's going on in the market, just to give everybody a little bit of a perspective, right? Right after the shutdown, obviously, things went crashing down in terms of new listings and pending sales, obviously. So this graph here shows you a year-over-year comparison of new listings that are coming on the market. And why this is important is, the amount of inventory coming on the market and the buyer demand. So, obviously supply and demand is going to affect prices, right? So we saw a huge drop in new listings coming on the market right after the shutdown, and that lasted, I think it's like a month or two. You can see here, 15 days after the shutdown, it was down 50%. So 50% less new listings coming on the market compared to last year. It dropped down as low as 60%. New York was seeing drops as low as 80%, and they're basically at that 80% for a long time. They started kind of going back up, but it's been really bad over there. So our market obviously isn't as bad as theirs, but yeah, we did see about about 2 months of just kind of a stale market in terms of new listings. So more recently, obviously, you can see that the amount of new listings coming on the market has gone up, which is great. It took a little dip here, probably because of everything that was going on in Los Angeles in terms of the protests and the riots and all that stuff. So I think a lot of people were kind of waiting for that all to finish. So we are seeing again back up in the last couple days. This here is an application called Showing Time. It's what we use to schedule showings. So if I have a buyer looking at 10 properties and I have to schedule all 10 properties, I go on the MLS and I click on Showing Time and I say, hey, I want to see this property at 1, this one at 1:30, this one at 2 o'clock. This is all tracked, right? So this data is comparing last year to this year. We're now back up above last year's showings. So the amount of showings right now is actually more than it was last year. I'm not surprised. Obviously you can see right after the shutdown on March 16th, it took a huge drop. I don't think anybody was seeing houses for at least a month after the shutdown, but that went up, and now we're probably seeing an excess of buyers that were going to buy in March, April, and May. Now they're starting to finally appear back in the market and starting to see. So this is all good data. This is showing you that there's more listings, so there's more supply, and there's more demand coming from the buyers here on the Showing Time.
Do you think some of that, go back to that slide real quick, do you think some of that, the spike in showings, do you think that's because there was pent-up demand of people just kind of waiting on the sidelines to wait and see what happens, and now that things seem to be moving in a positive direction, people are getting off the fence and back into the market?
100%, 100%. Yeah, there was, and it was just, it is not only just real estate, it was everything in general. People going shopping, to go buy stuff for their house, or just, shopping for clothes or any kind of shopping. They weren't doing that, right? So now everybody, like even like myself, right? Like I moved into a new place, so I had to go shopping. I couldn't even go shopping a month and a half ago. So now with everything kind of opening back up, and real estate actually has been an essential business for a while now, but people still weren't leaving their house, right? They didn't want to add extra exposure if they were living with their mom or their dad. They don't want to go out and even get close to anybody that might have the virus. So it makes sense. But yes, this is great data. Tell us a little bit more about what's going on in the mortgage rates, because we know that they're very, very low right now.
Yeah, so interest rates are at all-time lows. So just it seems like every single week we're breaking a new downward trend. So it's a very, very positive thing, for my profession in general, but home buyers as well, or people who already own a house, because lower interest rates just mean the cost of borrowing, your monthly payment is less. You're paying less of your payment is going to interest now. So it just becomes a really good thing. So there's two different scenarios, and we'll show it in a second, but you can either now afford a larger house, like a bigger or more expensive house, or you could get the same kind of house and just pay less and have it be more affordable. And so we're seeing a little bit of both, but it's important to just kind of acknowledge like how this impacts the real estate market as well, because generally speaking, the price of property is really, if you want to think about it, that the actual purchase price of a property isn't really what the important number is that people are looking at when they're buying a property. What they're looking at is, what is the monthly payment and how much do I make per month every month, right? And so then they compare the two things and decide whether or not they can actually afford that. And then we also have, maximum requirements. The most will lend based off of your income. But so that'll have, and we'll break down exactly how that plays out in real numbers, the headline number, which is the purchase price, but the number that's important to the average person is going to be their monthly payment.
Yeah, no, for sure. And this is just, anybody can go onto the Freddie Mac site and grab this. This is just the history of rates since the early 1980s. Obviously, as a lot of people know, during the 80s, the rates were so high, right? Over 15%, which is crazy. Although, a lot of countries, that's normal. My family is from Colombia, and my mom still lives there, and she tells me that the interest rates there are around 12%, and that's just normal. And that's absolutely crazy, but that's just how it is. We're very fortunate to be in a country where we could buy a house for with very little down now. You can probably do 3.5%, up to the FHA max here in Los Angeles. But the rates are just so low, or just rates in general. You can go buy a car at 0% interest rates. So just being very, very grateful that we live in a place where it's much easier to buy these assets.
Yeah, and I mean, and if you look at the real cost of borrowing, without getting too technical, U.S. inflation typically sits around 2% per year. I mean, if you're borrowing at 3%, the real cost of funds is 1%, and then the interest you're paying is also tax deductible. So you're almost borrowing the money for an effective net zero actual cost when you do it. So it's pretty a pretty fascinating time, really.
Yeah, for sure, and which is why I'm sure that you're being bombarded by refinances right now, because everybody is like, everybody knows that rates are at all-time low, so everybody's trying to get a better rate. So that makes sense. So let's look at our first example. We're gonna give you guys two examples. One is how are these rates increasing your purchasing power, and number two, how these rates can decrease your monthly payment. So Jack, why don't you kind of walk through these three different rates? So we're looking at 5% back in November 2018. So less than 2 years ago, we're looking at 5% rates, which that is still an amazing rate, right? 2018 was a great market. I mean, there was a lot of sales in 2018, kind of slowed down a little bit in 2019, but 2019, a little bit over a year ago, it was at 4%. So it's gone down a whole percent since last year in May. And today we're just about 3% or maybe a little bit under.
Yeah, I mean, in 2018, you could quote a 5% interest rate, and no one even questioned anything, and people were happy. They thought it was a great rate, and at the time, it was a great rate. But I mean, if you quoted them that now, they would think you're putting them in like a subprime loan or something. Right. So it's just it's insane how the perceptions change, and I get it, but it's just we're just in unprecedented times for interest rates, which is a very, very positive thing for the consumer. And no one knows how long it'll last. Anyone who's ever predicted what interest rates are going to be has typically been wrong. So it's anybody's guess. But right now it's a big deal. So just to give you an example, like if before in 2018, if you were to buy a house, you probably would have got a 5% interest rate, and so you would have been effectively able to buy $1 million property, and your mortgage payment would have been $4,295. That's your principal and interest payment. That does not include your property taxes or insurance.
Correct.
And so, a year later, literally, you could afford a 10% more house for the exact same payment. And remember, the payment's what actually matters to most people. So unless you're buying all cash, the payment's really what matters. And then, another year later, interest rates now, they're close to 3%. And so the same exact, you can buy a $1.2 million house for the exact same payment. So it really then becomes like you can now, it allows people to afford things that they otherwise would not have been able to afford. So which then puts more demand on those different higher price points, right? So that's, are you seeing that, Paul? Like people are starting to raise basically raise their purchasing price because now they know they can afford it.
100%. And they're also looking at it from this perspective. It's like, why don't we spend a little bit more, even by increasing their payment, right? Because rates are so low. So they're like, all right, they every buyer has a range, right? They're looking between, $1 million to 1.3 or something like that, right? Or 1.5 to 2. There's always a range, right? They always have a more comfortable price, per month that they want to spend on a mortgage. And then they have, one for like their dream home, right? When they're looking. So I have a lot of buyers that right now are looking for that higher price range in their range because they want to take advantage of the rates, right? Because they're like, okay, if we go with our lower price range and then we want to get a nicer home in a year or two from now, at that point we might not be able to get the rate at 3%. It might be 4 or 5%, and so now our purchasing power is less, and we can't buy that, we can't afford that house then. So maybe afford it now because the rates are so low. So that's a good example. But yes, that is completely true.
And just generally speaking, I can say this too. When COVID started and everything, showings really fell off, and then purchase applications fell off, and literally, basically 100% of my business became refinances. And now I have seen just a complete shift in behavior, and now about half of my business is purchases and half of it is refinances. And so I'm not saying people know better and know which direction the market's going, but if you were voting just based off of what other people are doing, people are confident again, and people are out there and people are buying and they want to buy. And I am just working crazy hours doing pre-approvals right now. So people, it seems like a lot of the fear is out of the market, and people want to get in while the interest rates are low, and move into that.
Yeah, and they're also, they're also watching and they're seeing that, there's less supply, right? So, a lot of buyers are saying, okay, maybe let's wait 6 months, 8 months, a year, 2 years, maybe the market is better. Yeah, okay, so let's just say in a year from now, the price of a house goes down 10%. Let's just say, right? I don't think it'll go down 10%. That's a huge number, but let's just say it goes down 10%, and that's a huge drop. And the rate goes up 1%. It's a wash. So why wait, right? Yeah. So that's why, again, when buyers ask me, hey, is it a good time to buy? I say absolutely. Rates are at all-time lows. So absolutely go out and buy if you can. So let's give them the next example is going to be decreasing your mortgage payment. If you're buying in the same price, say, instead of, hey, can I afford more house? Hey, why don't we reduce the amount we're paying? That way we're living more comfortably, maybe take some more vacation time or whatever it is. But, this is another good example of what buyers are doing right now is, okay, hey, let's buy now. Some people were going to wait until the end of the year or next year, but they're saying, let's just buy now because rates are so low. We don't know if it's going to go up or down, and we can save money. So, give us some examples here of these rates.
So and just as an example too, so this is part of the equation, which is making people get off the fence as well. Because if you think about it, if someone was like on the fence, they wanted to buy that, let's say $1 million house in this example, but they're like, I don't know if we can afford $4,295 a month. Like, it's just going to stretch us. I need to think about it more. And now that payment, last year went to $3,819, and now that same payment is $3,372. Now all of a sudden, the person who was like kind of uncomfortable with that higher payment, now they're comfortable with that payment. They're like, this $923 less a month, I can afford this. I can make this work with what I'm making. I'm going to get off the fence. And so you're seeing people jump into the market that had some real hesitation in the past.
Yeah, for sure. I mean, and so we just provided you guys with 2 great examples. And obviously, if you're in a higher price range, then you can afford even more too as well. Obviously, this is all shifts in whatever price range you're looking at. If you guys have any questions about rates, about buying, about areas, about anything, refinancing, please reach out to us. We're always available to help you guys out. Thanks, Jack, for joining us on a Saturday morning. I appreciate it, and we'll talk later on, man.
Okay, sounds good. Thanks, Paul.
Yeah, man.